Hey there, Ed McCormack here, founder of the crypto education platform, Dchained. Before we start today's video, I want to ask if you haven't already, please subscribe to this channel and pound that like button. Somewhere in the world, Peter Schiff is putting his fist up at the air of cryptocurrency, and you subscribing just helps piss him off even more. So we appreciate all of you who continue to tune in, and welcome to those who this is their first time. With that being said, we're going to cover one of the biggest storylines over the last week and something you need to keep a very close eye on in the next few days, which is the U.S. government's policy around spending and the price of Bitcoin. And we're going to talk about all of that right now. So before we jump into all of the different factors affecting Bitcoin right now, let's first talk about that first piece, which was all about U.S. government spending. And what we've seen in the last 12 to 18 months is really a pretty exponential spike in the overall amount every single month that the U.S. government has spent in order to stave off any potential financial crisis from COVID-19. And rightfully so, it was the right move, and regardless of which political side you stand on, to provide the necessary support for those who needed, and also to make sure that we had vaccines as soon as possible. And not going political, but spending had to get done in order to mitigate any risk as it relates to containing the overall virus and keeping our economy afloat. Now, with that being said, talking about the impact, it's still being felt today. In fact, roughly $120 billion every month is spent on agency mortgage-backed securities. So those are mortgage-backed bonds and mortgages owned by Fannie Mae, Ginnie Mae, Freddie Mac, the three inbred cousins that the U.S. government owns, as well as treasury bonds. Now, the reason I say this is in this process of buying $120 billion worth of these assets every month, what happens is that the U.S. government acquires them at a discount and then subsequently introduces more money supply into the overall economy. And that creates a scenario where inflation could creep in. Now, all inflation it's a barometer of the overall change in purchasing power for your U.S. dollar. As time goes on, you may have noticed that things get more expensive, and that's partly because the value that the dollar holds declines over time. And as a sort of best practice for here in the U.S., our Federal Reserve generally shoots for roughly about a 2% inflation rate. Now, with that being said, what we've seen over the last few months is that our inflation rate has started to creep up to about 5.4% in August, to about 5.2% in the latest report that just came out in the Consumer Price Index. Consumer Price Index, not turning this into an economics class, all it is, it's a metric. It's basically a weighted average of a whole basket of everyday items that you use in everyday life. Everything from food to transportation, all the way to medical care. And it helps dictate or determine whether we are headed towards inflation or deflation. And all signs have been pointing for a while around inflation. Now, why I'm bringing this up is ultimately, and we're getting there, what the latest numbers show and how analysts are predicting that people are going to react and flood towards Bitcoin. And ultimately, the numbers are not great. As I mentioned before, 2% is a general best practice that the Federal Reserve, who's the agency that controls and issues money for the United States, generally they look for 2%. In August, we're 5.4, September, 5.2. And ultimately, there are now reports that we're going to have roughly 5.2% inflation rate next year, all the way to 4% in 3 years from now. And if you were to take a weighted average of all of those years from 2022, 2023, 2024, and you were to put $10,000 into a savings account on January 1st of 2022, in 3 years, your $10,000 will be worth roughly about $8,000. So it's a 20% haircut just keeping your money in the bank. You lost 20% of your earnings in 3 years just because of inflation. And people don't realize how impactful that could be, especially when you move that timeline to 10 years or 20 years. Things get wild. And that's why, back in October of 2020, Citibank really was one of the first banks to really put their neck out on the line and talk about how, their customers and Americans in general are predicted to go to Bitcoin as a hedge against a devaluation in the US dollar because of US government spending. They saw that the government, which at that time was on a trajectory to hit the $6.55 trillion that it spent last year, despite only bringing in $1.9 trillion in federal revenue, they drew a parallel to similar type of ratios to 1973, when the US government disconnected from the gold standard, and ultimately you saw two different paths occur. One, you saw inflation creep up to almost 20% in the next 10 years that followed, while at the same time, gold, which was a fairly boring asset, it didn't ever move before then, start to appreciate pretty considerably, roughly over 1,000% during that same time. So what they projected was that in this scenario, roughly 40 years later, people weren't going to flood to the actual silvery, gold metal. They were going to its digital cousin, Bitcoin. And that ultimately has led to a lot of people keeping a very close eye. There's a meeting coming up this week by the Federal Open Markets Committee, and they're going to talk about whether the U.S. tapers off that $120 billion check that they're writing to increase the overall supply of money and keep the economy afloat. And if that happens, very much so, people will be looking at how does inflation start to either decline, stay stable, or increase in the coming months. Because as we hit 2022, a lot of attention is going to be what will the lasting impact of all of that government spending be on not only our economy and our US dollar, but also investments that we have. Because if the market takes a turn, you can probably anticipate that the stock market, which is going on an 11-year bull run, probably will feel a little pain as well. And people start to look for alternative investments, leaving Bitcoin as well as other cryptocurrencies a viable and very attractive alternative investment. So that being said, I hope you enjoyed this video. Again, if you haven't already, subscribe to this channel, pound that like button, and tell your friends and family. We are always looking to grow this Dchained community. We love spreading the education and objective information. We really want to make smarter investors out there, and please help us along the journey. So until next time, happy and safe investing. I'll speak with you soon.